Hello investors, this is a video on Bluejet Healthcare. This video is brought to you by SmartInvestor. Like our videos, share our videos, and subscribe to our channel. Click on the bell icon for new video notifications. This video is for education purpose only, and for all investment decisions, please consult your financial advisor. This video will cover the performance of the company for the second half FY24. These are the highlights of the company. The company has got a revenue from operations for first half of FY24, which grew by 7.8% year-on-year to 3,609 million. EBITDA for first half came to 1,216 million, up 25.3% year-on-year compared to 970 million in the previous year. EBITDA margin is at 33.7% as compared to 29% in first half FY23. PAT of rupees 920 million, up 28.1% year-on-year as compared to first half FY23. PAT margin is at 25.5% compared to 21.5% in the previous year. Let us look at the second quarter FY24 performance. Revenue from operations grew by 4.7% year-on-year to 1,814 million. EBITDA for the quarter came at 626 million, a jump of 6.7% year-on-year compared to 587 million in the previous year. EBITDA margin is at 34.5% compared to 30% in the previous year. PAT for the quarter is at 479 million, up 8.9% compared to 26.4% in the previous year. Continuing the highlights, the company has launched one more product in API segment during second quarter. Plant validation batches completed for one contrast media advanced intermediate. Successfully commissioned 7 megawatt solar plant September 2023. So lead to considerable saving in energy expenses in the coming quarters. On 3rd November, a fire took place in one of the unit at K1 Mahad industrial area. The company is in the process of assessing the extent of damage and delays this may cause to the ongoing projects. The key metrics for Q2 FY24, year-on-year growth of 3% in revenue and operations. EBITDA margin is going up by 34.5% at 626 million. Profit after tax is at 479 million, a jump of 26.4%, and earnings per share is 2.8 for second quarter FY24. The profit and loss statement, and let's move on to first half FY24 financial metrics. A growth of revenue is at 2,562 million, a growth of 17.6%. EBITDA and EBITDA margin is at 1,216 million, and margin is at 33.7%. Profit after tax is at 920 million, jump of 25.5% for the quarter, first half of FY24. Earnings per share has gone up to 5.3 in first half of FY24, a jump of 28% year-on-year. So the key metrics and the growth trends. Let's move on for the next slide. The shareholder information, promoters hold 86%, FI is 2.7%, others at 7.9%, and mutual funds have 2.3%. The company shares are listed in both National Stock Exchange and Mumbai Stock Exchange. What we see from the high stake of promoters is that as per the SEBI guidelines, the company has to reduce the holding to 75% in coming years. So we can expect a follow-on public issue or a rights issue from the company in 24 and 25. Now let us look at the business of the company. Company is a specialty pharma and health intermediate company offering niche products with an approach of collaboration, development, and manufacturing to CDMO business. Let's look at the company's activities at a glance. The company has 44 commercialized product portfolio, 1,020 kiloliter reactive capacity across 3 facilities as of first half of 24, INR 7,209 million revenue and EBITDA of 2,190 million. With 31.91% ROCE and 26.6% of ROE, and the fixed asset turnover is 5.62 times. Business overview: the three product categories include contrast media intermediates, high intensity sweeteners, and APIs. Specialized chemistry capabilities with dedicated R&D labs, long-standing relationships, and multi-year contracts with multinational clients. A company's manufacturing facilities are approved by regulatory authorities. Now, let's look at the overview of the business segments. Contrast media intermediaries is contrast media are agents used in medical imaging to enhance the visibility of body tissues. Company supplies critical starting, intermediate, and several advanced intermediates, which are used in X-ray and CT scan and MRI scans. 19 number of commercialized products, H124. Revenue and contribution is at 71.32%. And client relationship include top 4 players include 75% of global market share. The company has 4 to 24 years of relationship experience with the largest 3 manufacturers. Now let us look at the high intensity sweeteners business. This involves development, manufacture, marketing of saccharines and its salts. End users are tabletop sweeteners, oral care products, beverages, confectionery products, pharmaceutical products, food supplements, and animal feeds. The number of products are 4, and the revenue from these operations is 19.35%. Offers high density sweeteners to over 300 customers globally. Market clients include FMCG and global agrochemicals. Now let us look at the APIs. Contributes to 8.73%. The company has 21 products and collaboration with innovator pharmaceutical companies and multinational generic companies. Provides intermediaries that serve as APIs. Marketed predominantly regulated markets, 56% globally and 40% in India. Let us look at the contrast media and its growth drivers. So, what is contrast media? Is a chemical agent, enhances the contrast of imaging modality in diagnostic imaging, thereby aiding diagnostic diseases. Once inside the body, actively and temporarily taken up different body tissues, enhance the images, leading to better visualization of the tissues and organs. Types of contrast media is equal to X-ray and CT scans, contrast agents, MRIs, constant agents, and ultrasound agents stabilized for microbubble-based contrast media agents. The growth drivers for contrast media include growing population and changing demographics, with the estimated 69.9% of the total world population to 10.4% by 2025. The population above 65 years is likely to grow significantly in the coming years. Growing prevalence of lifestyle diseases such as diabetes, obesity, physical inactivity, increased convenience through online booking and reporting. The diagnosis has been made very simple, and there is more and more usage of online. Rising healthcare expenditure. Global healthcare expenditure grew at 3.9% CAGR from 2017 and is expected to grow exponentially. The company's focus on early diagnostic driven by advanced in diagnostic technologies and growing awareness, and people are now getting all these scans done just to ensure that the diseases are identified and medication is done. Increasing demanding for preventive healthcare as more and more knowledge is shared and patients are aware of various diseases and its impact on the body. Overview of contrast media and its growth drivers. Segmental breakdown: contrast media is around 74%, gadolinium 24%, and microbubble is 2%. These are the iodine-based contrast media. Pre-COVID and historical growth is 8 to 10%, and forecasted growth is 3 to 5% for 23 and 25. Let us look at the industry. Highly concentrated, and it has got first player is 17%, second player 20%, third player is 27%, fourth player is 11%, and others are 25%. And the total market value is at US 5.9 billion as of the estimates of 2023. Like a business is highly concentrated, dominated by multinational corporations, collectively hold 75% of the global sales of contrast media, formulations, forward integrated and long-standing relationship with manufacturers, helping the company to grow significantly. Well, this business has got a lot of entry barriers, strict internal standards for product inquiry and for features, thickness of relationship, long-term supply of contracts, and the CAGR is at 5,070 million and is likely to grow at 19.75%. And for the first half of FY24, it is 2,562 millions. The company continues to forward integrate into more advanced intermediates for cost media, strong product development and process optimization capabilities, underpinned by in-house research and development, focus on molecules with customer interest and strategy, outstanding on alternate sourcing, the next stage of advanced intermediates. Key starting intermediate in building block in 2000 to 18 additional advanced intermediates of H1 FY24. Further improving chemistry capabilities in close synergy with customers. The company has captured large market share with existing customers, higher realization and profitability per unit, potential of moving up the value chain. Bluejet contributes 3,000 to 4,000 metric tons to the global saccharine market by capacity, and oral care is 5 to 6%, non-alcoholic beverage is 6.8%, bakery and confectionery usage is 5.6%, vitamins and dietary supplements is 4.6%, pharma excipients is 4.6%, agrochemicals is 3.4%. The company has a capacity of 37 to 40,000 million tons and has got 3,000 to 4,000 capacity of Bluejet capacity, and 6 to 7% industry growth is expected and 33.48% for Bluejet growth. Contribute negligible limited calories, 300x to 500x sweetener than sugar, not metallized body are the basic advantages of saccharin, and it has been widely used in various sectors, oral care, non-alcoholic beverages, bakery and confectionaries, vitamins and dietary supplements, pharma and agrochemicals. As you see, there is a global demand is likely to go up for saccharin market, and Bluejet is in the right position to capture the market. A little overview of high intensity market and its growth drivers, and it's in 2026 it's expected to be 3.6 to 3.7 billion at CAGR growth of 7%. So what is driving the demand? A growing incidence of diabetes and obesity, 537 million adults living with diabetes in 23 and expected to be 643 million by 2030. Shifting of consumer preference, the more and more people are using sweeteners to reduce the intake of sugars. Increased investment in R&D and manufacturers by end products, rising urbanization and changing lifestyles resulting in higher consumption of ready-to-eat and processed food where saccharin is used instead of the sugar. Saccharin accounted for 12 to 14% of sales value and 17 to 19% of volume. Let's look at the positioning of the company in the sweetener segment. Products include adherence to strict internal standards to ensure consistency in quality, performance, taste, and purity. Multiple products and applications enabling to cater to diverse customer base. Compliance with GMP, US FDA, semi-automated manufacturing facility, strong production development and process optimization capabilities. Offers high-intensity sweeteners over 300 customers globally. Focus on marketing clients. The high-intensity sweetener performance revenue in Indian million has grown to 1,758 million with a CAGR of 33.48%. And for the first half, the company has clocked 695 million in sales. Let us look at the various pharma intermediates and API segment and the key trends in pharma and CDMO market and features of typical arrangement by supply intermediaries to innovation, new entities. Now let us look at the performance of the company for the last 1 year. Bluejet has been doing not very good in the market because currently the share is trading at 364 with a year high of 433 and a year low of 320. Currently trading near about year lows. The last 1 year it has dropped by 2%, 50 rupees, and the last 6 months it has come down by 11.50, and in the last 1 month, the share price has gone 3% or 12 rupees. And trading week, the share has yet to catch the fancy of the investors, but looking at the high percentage of holding by the promoters and a good product base, it looks like this company is likely to do in the coming years. The only catch is that when the management wants to reduce their stake from 86% to 75%, the equity could be floating the market and increasing the supply of shares. And with the demand not catching up, the share price is likely to stagnate in the near term. Well, investors need to track the performance of the company for the third quarter, FY24, and any green shoots should be identified and await confirmation from the management for the dilution of equity to comply with the SEBI norms of 75%. This video is brought to you by SmartInvestor. Like our videos, share our videos, subscribe to our channel. Click on the bell icon for new video notifications. Thank you.